You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time for the Rockin'est show on the old network. Yes, it's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, you know the drill, the old Options Insider Radio Network. If you're listening to this via the old network feed, congratulations, you have done it properly. If you just subscribe to Option Block, we like you too. You guys are cool. But if you want to upgrade on to the full-on network feed, that's pretty cool too. You get all the other shows we have there as well. And wherever you're listening, if you feel so inclined to leave a review, 5 stars, maybe 4, because we got the Rock Lobster today, I'm sorry. But whatever you feel inclined to do, head on over there. Those kind of fun things always, they work for those fancy algos that determine how easy it is to find our stuff on these platforms. And if you've never done search on anything like iTunes or anything else, you know how terrible it is. So all the boost everyone can get, the better. And of course, for those of you hardcore, say I don't want to download. I want to listen to it live. I need it in my ear holes instantaneously. Got you covered. Mixlr, MIXLR. Grab that link. Set it and forget it. We use it all the time. So it's the same link every time. Once you got it, you're good. And then you get all of our shows, not just this show, but all the shows throughout the week that we do live. So check them out there. Did a bunch of shows today, not all of them live. So today's the first live one today. So there you go. Putting that link to work now. And of course, wherever you are, however you listen, hit us up. Questions, comments, insights, all that good stuff. We actually do, yes we do, like to hear from you folks. And joining me on the program today, let's welcome on an old friend. It's been so long, I don't know if he remembers even how to do this. You know, there's a mute button. He has to unmute. There's a challenge. He's lured away by leaf peeping off in the woods of New England. Let's see if we've lost him already. He is, you may remember this guy. Some people used to call him the Rock Lobster. Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How goes the leaf peeping?
You know, a lot of leaves are coming down. All the red leaves are, I guess most of them, but the leaf peeping is still, I peeped this weekend, and last I checked, there were plenty of leaves. So we still have leaves in New England.
There are leaves to be peeped. I was talking to your cohort, your compadre, Mr. Matt Amberson over there at ORAS, just on the show about an hour ago, and he was telling me about the New Hampshire side. So now we got the Maine perspective on all the leaf peeping. All these northern New Englanders chiming in on the old network today. There you go. If you haven't been over there in a while, listeners, check out. This is the time of year to go. It is quite beautiful. As more of a southern New Englander myself, I still like that stuff. All right, and moving on over to, I guess he's back in St. Charles again, so he's back under the weather shield. We are joined by good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. Sir, how goes the leaf peeping in St. Charles, if there is such a thing?
Always happy to be here, and it's a matter of fact that 90 leaves in Kane County end up in my backyard, I'm convinced. There's a lot of leaves, and the wind with which the way it blows, and a fence by my neighbors on the one side of my house kind of acts as a leaf catcher. So combine that with Andrew probably driving in truckloads of leaves in my house in the middle of the night. We had a lot of leaves in my house.
I read an interesting article the other day. I'll have to find it and send it to you. You'll like this. I have no yard, so it means nothing to me. But it says you should leave your leaves on your grass because it creates some ecosystem for other things, and it creates mulch and everything else. And everyone who rakes and then deposits it in a landfill, it wastes resources and uses up space in landfills. So the moral of the story: you don't have to rake, Uncle Mike. I just saved you many days worth of work. So there you go. You're welcome.
I'm glad someone on the internet said so. Now I feel better.
There you go. Tell your wife that. If it looks weird, but hey, the internet told me not to rake. So there you go. And last but not least, he's sad because he's in the pool house, but they're covering up his pool. That means no more tubby paloozas and parties and so forth. We are joined by the Tubinator himself, Mr. Matt Tubby Benson, from still the man about town. Maybe someday soon we'll figure out which local deli he's working at. Mr. Matt Tubby, welcome back to the show, sir.
Well, good to be back. Hello, Mark. You create some pretty unhappy neighbors if you don't rake your leaves. I found that to be more damning than actual other growth in the yard that might come up if I left the leaves there.
Well, being as someone who has no neighbors, then I don't know. I don't know your pain. I'm just speaking, again, what the internet told me. The wisdom of the internet springing forth. And it makes a little sense to me. As a man who raked a lot of leaves in my youth, I wish I knew that a few decades ago. Would have saved me so much labor. But instead, let's labor on forth into our first segment. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is the portion of the show where we break down what was trading, what was going on, what was lighting it up on our collective tapes. As we're streaming this and recording this here, it's a little after 3 Central here, so most of the major indices closing up or unched on the day, slightly so. S&P up about less than 0.25%, Dow up less than 0.5%. The Q is pretty much unched on the day, and VIX cash, I don't know what this number is, this 11 handle, I don't recognize that. My brain is only programmed for 9 and below now, so I can't handle this crazy double-digit VIX that we got this week. I don't know. Mr. Rock Lobster, I'm glad you're on the show. Maybe you can make sense of this just ridiculous level of volatility known as double-digit VIX.
It's it is a wonder. All of a sudden.
Have you ever conceived of anything so lofty in your life?
Anything above a single digit. I'm right now. I'm all agog actually right now, and I think after all of these technology earnings coming out, I don't know if it's going to last very long. What I thought was amazing yesterday was the move on Monday. VIX was 980 or something at one point, and it touched over 13. All the futures totally backward date. Not all the futures, I'm sorry, but cash to future was backward out of 13 volatility. So just really weird stuff. The thing was, even with the cash flu, just future traders, there was not a bid for the futures. They just never let the futures lift. I mean, in the short term, almost at all. So there were some worries yesterday. I don't know about, Draghi, there's ECB, are they not going to walk out the rates, stuff like that. And then you have tech earnings, which are coming out, all that stuff. So there's just enough to make everybody a little wobbly. But, VIX cash shot up and I think there was some, zero hedge, tinfoil hat people about, a future squeeze and all that, which certainly could have been. But it was more cash SPX squeeze than anything else. So that's the reality is we had a little vol yesterday. The market sold off a little bit yesterday. It was the first time in, 3 weeks or something, 4 weeks. And almost as fast. Yesterday I was surprised when VIX closed. VIX closed 11 after trading a little over 13 in the middle of the day. So, and right now it looks like we could see a lower number as well. So I think it could be a fleeting thing by Friday afternoon. That's all we're saying. It could be this double-digit VIX. It could be fleeting by tomorrow.
Speaking of fleeting, there's some fleeting numbers coming out after the bell here. A lot of names popping off after the bell. We're going to get to all of them in a second, listeners. You got Softy, we got Alphabet, a.k.a. the Googs. We got Amazon, we got Twitter. We can look back at Chipotle. A lot to digest. We'll get to that in a little bit. But before we do that, let's turn over to the man about town, soon-to-be CIA analyst Matt Tubby Benson. What caught your eye in today's activity, sir, as we await all these big numbers? It does seem like Amazon's out, and they are, I think the technical term is, holy crap, that thing's moving.
Yeah. I think Andrew's right. I think VIX may open below 10 just with looking at some of these numbers already. The one that stuck out to me today was Twitter. The stock was up about $1.70 on good earnings, but it ran another $1.70, $1.50 from there. I think probably getting a little bit of credence that maybe someone will come in and take them over, that they found a way to at least come close to making money. That one, I've been in and out of that stock for about 6 months now, and unfortunately I'm not in it now, but I missed this move. But forever I've been thinking the stock's got to be a takeover, and couldn't figure out why they can't seem to monetize a product with so many users, including 45 heavily. So I think we finally got a little bit of there you go out of them with this number, and you're going to start hearing some takeover chatter, I'm going to guess, in that one. Other than that, biotech's been on the on my radar as well. Everything's getting killed. I was watching Gilead. It's just, I don't know if it's just come out or what, and that's kind of unchanged right now, but it was down $2. They took it down in the last 4 hours of trading, probably assuming what had happened to the last 6 or 7 big names. So those are what I've been watching.
Yeah, it's interesting stuff. The Twitter thing, it's fascinating. I thought for sure back in their last time they were in play that Google was going to scoop them up. It just seemed to make a lot of sense. If anyone can make use of all that data that Twitter has, and Twitter at this point really is a data play, then Google is the one. Indexing all that juicy social data must have been just salivating for them, and yet apparently Twitter priced themselves out of the ballgame. Even Google, who's been shown to pick up platforms that they can't really make money with yet, like YouTube, and still use them for all the other, extra benefits they get out of that, and continue chugging along, spending a lot of money on this thing. They were unwilling to do that again, apparently, with Twitter. So interesting. Maybe these numbers will spark a resurgence. And last but not least, Mr. Uncle Mike, what caught your eye in today's activity, sir?
A couple things. Big Blue IBM had that ginormous run up to the 160 plus level last week. We're almost back down to the 150 level again. It's one where this is actually a stock that I've been just kind of playing, doing some wheel trades on at the 150 level. So thank you to Big Blue for coming back down so I can sell some puts again. That was nice of you. Also, just to kind of add to what the Tubster had said, I'm watching IBB. I've been doing the wheel trade on that one for a while, but I've had to kind of sit out the last month or so because IBB was up in the 330 plus level, but has come down again, and I was able to sell some 300 puts yesterday, actually. And so there are some things that are coming down. Up on the day, we have financials. We have XLF up about 0.5%. Metals are down a little bit, and it seems to me, from what I can tell during the trading day today, anyway, that there really was not a lot of movement. It seems like everyone was waiting that maybe thinking Amazon might go up almost $100 or something. I don't know. So right there, I just teed you up a really nice segue, Mark.
Thank you for that, sir. It's like you've been doing this once or twice or so. Let's get to them. Let's get to the big names that are popping off after the bell today. A lot. Like I mentioned, Twitter, Amazon, the Googs, Microsoft, good old softy, lots of fun stuff to talk about. Let's start because everyone's just, I mentioned it before, it was just off the charts. That is good old Amazon popping off after the bell today. It was up nearly $60, and that looked crazy. As it is now up 71.5 or almost 7.5%. They closed today at about 972.5. They were pricing in around $40, a little bit shy of that. So about somewhere around the neighborhood of 4% for this name. So Amazon clearly knocking it out of the park, at least in first blush here, almost doubling their straddle here going into this. So premium buying, who knew? Perhaps this is the quarter where all the premium becomes back in vogue. Amazon again looking lofty, but blowing through it. So didn't really matter. Good old Twitter as well. Also, the Tubinator is talking about this one. This one closing today at around 2030, and they're up. They're pricing in about $1.50, so right around 9%. is what they were pricing in. And so far, well, they're up pretty good on the day. They're up about $3 on the day. So I think you can count that as pretty much their move here, because the left here in the after hours is just pretty much unched so far. Good old the Googs as well. The Googs, a.k.a. Alphabet. And Twitter was, of course, before they opened, so they had their big move today. So, so they were looking, I said, $1.50, pretty much 2x that, around a little over $3. So again, 2 for 2 so far in terms of premium buying. Let's see if we can keep the streak alive. Maybe you don't like the streak if you're a diehard earnings seller. We shall see. Let's move on to the old Googs, a.k.a. Alphabet. They closed today $9.91.5 or so. This is the name that's pricing in right around $41 or so somewhere in the neighborhood of 4%. And so far here in the after hours, up about 4, a little over 4%. So there we go. Trading over $1,000 right now, trading about $1,033 or so. So again, Rally Ho Palooza, pretty much keeping right around the $40 level of that straddle. So let's put that in the plus column, 3 for 3, looking pretty good. Let's head on over to the softie. Remember, we've joked about this one in the past. This used to be like, I think, the most reliable premium sell on the street for the better part of a decade. You'd come in, you didn't get a lot of juice for it, but what you got, you tended to keep. So it was a pretty reliable deal. In the last year, I'd say year and a half, kind of a little bit of a different script. They've changed things up. They move a little more now. They have a little bit more vol, and they actually keep up with it, which is also kind of interesting. Good old softie here, closing today 78 3/4 or so. They were pricing in about $1.75, so a little bit north of 2%, about 2.25%. And right now in the after hours, they're up about half of that, about a little over 1%. They're up about not even $1, almost $1. So we'll see. That's about they're up about 90 cents. They're pricing in about $1.80, so right about 50%. So let's say 3 for 4 so far of our names. But if you want to go back a little bit. Back to earlier this week, we can be 4 for 5 because good old Chipotle came out a few days ago as well. Ticker symbol CMG. They, of course, formerly known as the Stealth Apple. Not too stealthy these days. Time taking it on the chin. Happening again this time. They closed. Let's see. They're pricing in at about $20, so right around 6.25% or so. When they ended up moving double that, they opened up down over 40 handles, like about 41.25. To be precise. So all of you out there who've been following the endless drama that is Chipotle, there you go. More grist for the mill. Mr. Rock Lobster, I guess we'll start with you. Obviously, your hardcores in your chat room like this kind of stuff. What is the name that was resonating with them today? What were you guys watching? What were you guys trading?
Most of our guys, or a lot of our guys, did a lot of pre-earnings. They have done like pre-earnings Microsoft, buying stuff into the earnings and then selling them out beforehand. That has been a pretty great trade. Our guys looking at Amazon, and they're actually kind of trading it a little bit after hours right now. So all that kind of stuff, mostly just kind of, I want to be long this technology upside stuff. So I think there's just mostly just happy people. Watching this go up.
It's like the old days. You just got to buy it because what does it do? Oh, it's online. Doesn't matter. Let's just buy it.
It just goes up, and it's like with some of my pro mentoring students were just looking at long-term vol. It's so inexpensive. You just buy it, and there's almost no decay. You just sit and watch. Okay, the stocks go up. You just sell out some of your calls, and that was a great play in like 1995 or 94. And I go, it'll never be like that again. And surprise, it is. So you just have to sometimes you have to reach farther back in your playbook to do things.
Mr. Tubinator, I know you've been looking forward to today a lot. Any of these names really resonate? You mentioned Twitter before. I mean, Amazon, good grief. They continued to confound their critics. People keep saying, I've been ringing the death knell for Amazon for, over a decade, if not longer. And they thought maybe this Whole Foods acquisition was a bridge too far, or the other things they're talking about. Now, the headquarters thing, yet none of it seems to be able to really derail this stock. This one catching your eye? What was catching your eye amongst these names that are almost all of them beating their straddles right now?
Yeah, I mean, I don't think we've seen it pronounced like this. There's 3 or 4 of these stocks really getting after the straddle. I actually looked at a butterfly on Amazon, and you had to go so far outside, and I still would have gotten killed around the straddle. So I'm glad I stayed away from that. Yeah, I mean, I'm with Andrew. These are some names that just you almost have to be long. I mean, at some point in time, Amazon keeps taking these hits, and it was down to $936 or $938 2 weeks ago. Ran up to 1,000, was back down to 965. I think in general, you just have to be long these, and it showed you that for the last 4 years. We're moved from $300 a share up to this level, and I don't think it's going back down to 300. I think this one's for real. Vice versa, Chipotle. Can you pick another stock in the stock market this year that is down nearly 50%? That isn't just a one and done type stock. I mean, this is a real corporation in one of the greatest rallies of our recent memory, and it's down 50%. Those are things that are catching my eye.
It's mind-boggling. Sort of yeah, you're right. I was early on the train for Chipotle, and I was one of the ones I unfortunately sold them out way too soon. One of the few, I don't dally with stock that often. That's one of the few that I did because I just saw the growth of that one so early on. It's in Chicago many years ago, and it seemed like that was destined for great things. At this point, I'm kind of glad I didn't cling to it any longer because you're right. This thing is kind of bucking the trend. And just a flat market down 50% is terrible. Down 50% in a market where everything else is up 20, 30, sometimes more, doubling. That's just even more painful. And it seemed like they're kind of just piling in at this point. I mean, I see every time there's anything, someone finds a video of a rat somewhere near Chipotle, they post it online, it gets 1 million views, stock takes a hit again. I think this time it was the hurricanes and the guacamole and a bunch of other things, avocados, prices and things just all combining to weigh on them. So yeah, it's been a unfortunate series of events there for Chipotle out there. Uncle Mike, which amongst these earnings stalwarts was catching your eye today?
Oh, that would be Mr. Softy. That's one that we've been doing in the triple income strategy, so we're excited about that one. We've just been doing the wheel stock or the wheel trade on that for quite a while now. So we're at the 82.50 mark in the covered call, and so far, it doesn't look like it's going to go through that, but it's one of those situations to where if we did get called away, there'd be a whole lot of grinning going on, mostly by me.
There you go. A lot of grin. You're grinning on a regular day. I don't know what you're talking about. So this would just be extra grinning, I suppose. All right, we'll keep the earnings watch alive as we keep rolling on some of our other names. If things keep popping off or changing, we'll come back and check in on them throughout the show here. As we keep on rolling into the weird, the odd, the wonderful, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Listeners, that funky tune that has me dancing over here by myself in the studio. I'm glad no one's here to see me dancing because it would be embarrassing. It's, of course, time for the Odd Block. This is the portion of the show where we break down the weird paper. There's a lot of weird paper going on these days. Not just in earnings names. Those are all weird, too, and the movements are weird. Let's start off with some of the weirdest. All you guys are out there saying, oh, these little crazy Tesla puts, they're just filtering in little paper, not much big size going in. Well, got news for you. They're printing again today. These Tesla Jan 2019 50 puts, catastrophe, Musk insurance, Model S insurance, call them whatever the hell you want at this point. We said a week ago, they just broke the 30K level on open interest. Guess what? They're up to 32,000 now. So already had a couple thousand. And guess what? Today, another 1,000 hitting the tape. 1,129 to be precise, of these crazy ass puts keep hitting the tape. It's madness. So all of you guys are out there saying, and it might have been a funky ratio. 250 of the Jan par puts went up. So these are 2019, by the way. So there is about almost a 1-by-2 ratio option. That's about 15,000 open of the Jan pars as well. So a lot of action. But I think Ophir was on here a week or two ago saying he thought it was a ratio. It's just size action on these crazy puts. I don't know, Mr. Meatball, Mr. Rock Lobster. Are you guys finally in Carmen line just gobbling up all these Jan 29? Is that you guys up there today?
Exactly. That is a little outside of the Carmen line disclosure or purview or whatever you want to call our investment strategy. So No, we've avoided that. Although if Mark had his way, we would be short a Tesla for into the foreseeable future, I think.
So you're saying, as risk manager for Carmen Line, that does not fall under your risk parameters, sir? These crazy puts. Exactly.
But you know what? Maybe it'll be funny if they actually make somebody money. But I still don't think that'll happen. But it's still I keep thinking it's probably some kind of junk bond insurance or something like that. Because they do have quite a lot of paper out in the market, quite a lot of debt actually, because they keep having to fund all their new cars and all that stuff. So I think one of the reasons what used to be, I remember just, and you probably saw it, companies that have the chance of BK, they have a lot of bonds. There's a lot of put buyers where if they're already selling bond swaps, like CDS insurance or something like that, they charge so much money for that stuff anyway. They could pay anything for an out-of-the-money put. It wouldn't really matter, to be honest, because they make so much money selling the CDS. So they'll just buy as many puts as they can forever until they actually need them or the CDS goes out worthless. So it's a nice little business to be in, apparently, except in 2008. Every other year, I think it was pretty good.
Yeah, apparently whoever's writing these things is doing a little bit at a clip, except till today when they got to do 1,000 to hedge. So they're just putting up a couple hundred of these puts a day. Apparently they're maybe on the CDS side, they're just blasting out tons of these things. I don't know. Yeah, it's if we hit 50 in Tesla, I think there's gonna be a lot of interesting headlines in the marketplace to dissect or digest. So there you go, all of you saying, is there big paper in these? Certainly there is today, and up over a couple. I'm guessing there's gonna be more open interest tomorrow. Probably going up at 33,000. So we just broke 30,000, already up 10% since then. This continues to be the biggest OI position in Tesla, which is saying a lot, considering that's a pretty active name. All right, so let's move on let's look back. We like looking back on some of these names every now and then. We bring up names, we talk about them in the odd block, then we kind of file them away to see what happened. Let's see what happened in some of these names. Let's start with this is August 7th. And what do we got here? Yeah, the P&G, good old Procter Gamble, ticker symbol, of course, P&G. Closing today, $87.67. But where we were looking at them, it was back on the 7th of August, actually. Let me pull them up where they were then. On the 7th of August, they had closed at about 91.5 or so. So a wee bit higher than they were today. This is the name that does about 18,000 contracts or so on a given day, close to 19. We saw a block of about that size going up just about 19,000, so pretty much their entire ADV in one trade. Going up back then, it was the OC 97 halves. They were pretty aggressive. They were pretty much at or near the offer on all of these. A total of over 22,000 went up for 22 cents. So it seemed like someone was just scrambling to get some upside here in good old P&G. There was really no open interest to speak of, so it looks like it was someone just kind of really opening here to get some upside in good old P&G, and they had to have it. We also saw a bunch of the AUG 90s were printing that day as well. Nearly 10,000 of those went up as well. Those went up in smaller blocks, 500 to 600. Some printing through the offer, so probably some late prints there as well. Also, no real OI on that strike, about a couple hundred there. We watched this one. Going back, looking at it, these things obviously have expired now, these calls. And so far, good old P&G never really hit those lofty levels again that it needed. Certainly not the 97 half. The 90 kind, you could probably debate that they got out there. But it got close. We flirted with it once back on September 20th here with the P&G hitting almost 94.70. So that was about as close as it got. So the calls never went in the money. As you know, these things, they don't need that to be dumped. But yet we didn't really see that with these because they went out with an OI of about over 60,000 contracts on that strike. So it does look like more piled in after this trade, and that all of these bad boys went out worthless, unfortunately, for our friend here, who, unless he was massively short, in which case he still wasn't that happy because the thing didn't really get tanked either. So it's kind of a no-win scenario. I don't know. Any thoughts here, Mr. Rock Lobster, on our friend swinging for the fences and kind of missing here in P&G?
Don't you think P&G is a tough swing for the fences stock?
Yeah, that was my first thought when I saw this. I was like, really? You're going to do this here? Some crappy biotech? Sure, I see that. But this one, really? I don't know. It's a hard one.
I guess, there was the these guys come in and they do their corporate activist thing, and they shake the tree and they talk, and they, this board sucks and everybody sucks and the management sucks and all this stuff. And, I could see how there's possibilities for one of those, but, ultimately you just basically sell puts in a Procter & Gamble. You don't buy calls in it, but maybe they thought they knew something. Maybe.
Clearly they did, because they weren't even buying themselves a lot of time. They were buying, I think at the time was about 2 months or so. So, yeah, it wasn't a huge, future play that they were betting on. They thought this thing was going to move and move pretty hard and move pretty quickly. And unfortunately, none of that really materialized. So there you go. Size money, as we said many times, listeners, not always the smart money. Like I said, a lot of open interest on that strike as it went out. So maybe some other paper piled in which case this was even more of a loser than that initial 20K or so would represent. Mr. Tubinator, any thoughts on this here? Our friends at P&G swinging for the fences and unfortunately losing. I'm sure you put up 1 or 2 tickets like this in your day.
Oh, for sure. But I agree totally with Andrew on this. I don't know why you do anything but just sell calls. I'd probably just be long the stock. I mean, it's not going to be your big player in a market move like this. It's a defensive stock. But, literally it's had, I don't know, maybe a 12, 13-point move in the last 2.5 years. This would be probably right in Mike's wheelhouse of wheel trade type stocks, not long options, $7 or $8 out of the money. No.
A wheeler, a triple incomer, as they call it over there at RSM. You could dispute the third leg of that income, but that's a conversation for another day. Let's move on to another victim here in the old odd block today. This is JetBlue. We're going back this time a little bit farther, going back to July 27th to review some paper we looked at back then. Back at the time, it looked like the old call spread, call vertical with a put kicker, financed by a put, call it what you will. It was out in D's, so these are still on the board, which is kind of interesting. Was the D's 24-28 vertical, going up 5,000 times. Looks like paper buying it. It traded 5,000 times the day before, too, for 22 cents. That's the net package, because there's a package to this. The package on this one was also the D's 19 put. So one of our preferable. I like the old bullish risk reversal. In fact, spoiler alert, Uncle Mike might be getting into some risk reversals in a little bit here on the strategy block. But I've always been a fan of a bullish risk reversal. If you want to add that call kicker, I'm okay with that as well. I don't know about JetBlue. I haven't watched that name in a while, but if that's your poison, c'est la vie. So a total of about 10,000 traded in 2 days. The first block went up for about 27 cents the day before. Stock was about $22. This time the package went up for about 17 cents. So a little bit better on the second kind there when he's buying this thing. So interesting stuff. Of course, bullish risk reversal, financed by puts. You want this thing to head north. You don't want it to break that put line to the south. If it does, you're buying some stock. Not the worst thing. Hopefully you've identified a level you're comfortable doing that with. But oftentimes with these types of trades, the put's usually just a way to finance. They don't really want the stock. They want that upside. That's what they're paying for. Let's look back here at the year that's been out here in JetBlue. It's kind of been vacillating all over the place. Got as down as low as 17. Got as high back in July, not that long before this trade, of about 24 and change. So that was pretty much the high right around there. And this guy put on this trade about a week or so after. So maybe inopportune timing, because he said, you know what, they just had earnings. Earnings were actually on the 24th. So a couple days before this trade went up, they had earnings. Our friend here clearly thinking, the sky's the limit for JetBlue. Got to get in now. And so far, the calls are useless. And the puts, he's in danger of getting hit on those puts. He wrote that 19 strike for the puts. The stock's at 19.59. In fact, briefly there, he was in the money. This thing got down to 18.05 back, about a month and change ago, back in early September. So this guy might have been sweating for that. And yes, I say this guy because these are still open. There's about 10,000 of the puts open, 11, almost 12,000 of the 24s, and about 10,000 of the 28s. So our friend here put this on, gave himself to Dees, and he's taken full advantage of all that time because so far, at least, if he's come close to anything, he's come close to buying some stock. Mr. Meatball, I said it again. Mr. Rock Lobster, what say you here on this bullish risk reversal in JetBlue? Not perhaps working out so well so far.
is the airline trade has been tough lately, hasn't it? Don't you think? I thought
our friend here would
much
certainly
better.
agree. Yes, our friend here would agree on that point.
I know. So, the bullish risk reversal. You know me with those things. I tend to be a little stingy with how I like to trade them. So I usually prefer just selling a put.
Yeah, you'll sell the put and then you'll wait for the call part. That's what you do. Which would have worked out maybe all right here, a little bit, maybe.
So it's still if the stock goes down, it's not great and you're going to be taking it. So I never seen the reason to actually buy the call until you had some confirmation. But unfortunately, it's hard for me to change my stripes on that. So anybody that is counter to my own ideas, I have to just say, I have to give them the pshaw. So
I could sense a pshaw coming your way. You're such a juice for free man. If you don't get your risk reversal for free, you just pshaw. You want nothing to do with it. I'll give you an indicator here. These puts are trading about 60 cents right now, and the call spread is worthless. So that gives you a hint of how it's looking. It's 60 cents in the wrong direction for this guy. So we shall see. He has a chance. He has all the way to D's for this thing to rebound, but at least so far, ain't looking too good. Mr. Tubinator, what do you think? So far, we're 0 for 2 here on our odd block. Not looking too good for our friends here.
Yeah, and there's only about 8 Fridays left before Christmas, so that's not a whole lot of time left all the way out to D's. I enjoy coming on this program because I learn things every time I'm on it. As a retail trader, as someone who just kind of wants to get in and out and doesn't have a super large account, it's kind of hard to short things, and buying call spreads is a cheap way to get in, especially if you can have the put kicker and essentially have this $4 call spread on for 22 cents. Personally, that's something I would do, and I love listening to Andrew say, talk about getting into selling the put first, and Mike talking about that when he does the wheel trades and things. It makes a lot of sense to sit back and wait for the call. But this is the type of thing I would do. Now, obviously, this guy doesn't have a small account when he's trading 5,000 and 10,000 of them. So someone must feel kind of the same way I do about investing. But, he's not going to win this trade. Airlines have been difficult. The last 2 weeks or so, it looked like American and United had gotten back to about their end of July levels and then really took a big tank in the last 2 weeks. Where JetBlue didn't seem to find that middle ground in October here, getting back to a little over 22, which they would have been at the beginning of August. They couldn't find that and going lower from there. So I think this trade's done, and he may want to just get used to getting long the stock at 19.
Yeah, at least he's probably happy now. He's not getting long the stock when it was down at 18. That was looking a lot worse. That was looking a lot worse. But don't listen too much to the Rock Lobster. He'll talk you out of buying all your juice forever. You'll be a juice for free guy just like him pretty soon. All right, maybe that's your first convert for your forthcoming book that you've been promising forever, Mr. Rock Lobster, how to get your juice for free. Speaking of which, if you're intrigued by these risk reversals that we're talking about here, then stay tuned because Uncle Mike got some for you coming at you in the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strat Block, the portion of the show where Uncle Mike holds court on whatever catches his fancy. Just so happens this week, we didn't plan this, I swear. It just so happens he's holding court this week on risk reversals. Uncle Mike, we just saw an example of a risk reversal kind of blowing up in our face there, at least his face, the guy who traded it, or gal, whoever did trade it. What do you got for that person out there, as well as anyone else out there who's maybe stymied on these risk reversal things?
Well, how can you not like a risk reversal? Well, that is except when you have to pay for it, according to Andrew. So that would be a time that Andrew wouldn't like
and
it.
He would say
he's a
pshaw
party
to you.
pooper.
He would say pshaw to you.
He would say pshaw. I don't know what pshaw means, but my name is Mike Tosaw, not pshaw, so I don't think it's an insult. But nonetheless, let's get back on task here. A couple of years ago, what we decided to do going into I shouldn't say a couple of years ago, but about beginning of 2016, for our SPY hedge, we decided to do a knockout collar, meaning SPY was trading at roughly 205. We bought a 9-month out 205, 185 put spread. And for financing, we sold a 225, 245 call spread. I've gone over that trade on the show a few times, but we've come to September of 2017, and we decided to go the route of the risk reversal. We were at a point to where we felt that volatility was low, still is low, my opinion. You never know. The VIX could go to 2, and then it would be very high right now, but we consider vol to be low at this point. So what we wanted to do is have a way with which we could have upside potential and also have a little bit of protection to the downside. And so in doing so, what we wanted was to have the ability to kind of bail ourselves out should the market go down. Yes, we are bullish, but as I always say, I'm long-term bullish, short-term cautious. So the first question that I always like to ask myself with any trade, whether it's a one-day trade or a one-year trade, what's the plan if it goes against you? So what we were able to do, and Andrew, this is an okay risk reversal. We actually were able to do it for a nickel credit. We were happy with it. We went to Of course. So we got those commissions paid for, by gosh. Actually, and then some, because needless to say, through the RCM umbrella, we do get 35 cents per contract. No ticket charge, but that's a shameless endorsement with which I don't want to get into too much right now. But with that being said, we sold the 225 put 1 year out. We were able to take in a $7 credit for it. Now, at the time, SPY was trading just under 250. So we felt that if SPY were to go down around 10% over the course of a year, we still had no risk. The first 10% of the downside was totally covered because of the fact that the obligation was 10% below the current price. Now, with that being said, we also have a very bullish stance over the course of the next year. I know everyone that's listening to this show hearing me say that is very shocked. I know that. But we decided that instead of trying to buy a call spread and try and capitalize on a smaller move, we decided to buy an out-of-the-money call. And we bought the 262 call, roughly 4% out of the money at the time. And so our thought was that, and still is that let's say we do absolutely nothing between now and expiration. Well, we have zero risk on a 10% pullback in the marketplace. Should it get to the 10% pullback in the marketplace, what would likely happen is implied volatility would likely be higher. Can't promise it, of course, but with the inverse VIX market relationship that we've seen for many years, it is likely that the VIX would not be at 11 if we all of a sudden had a 10% drop. With that, it typically makes it easier to roll puts down and out. You can roll puts and get more time if volatility goes higher. And so our bailout, so to speak, wouldn't be by no means easy. Nothing's easy, but it would be a little bit more favorable if we were to touch the 225 level because of increasing volatility with which we believe would happen should the market go down 10%. Now, let's say that SPY were to just stay at 250 for a year and we do absolutely nothing. Well, nothing happens. We got our nickel credit, so now most likely we would trade out of it and do something. But let's just say we did nothing. We could at least please the rock lobster knowing that we got our nickel credit out of the deal and we got something to where we got our juice paid for. Now, with that being said, of course, the wish is that we want the market to go higher in this trade. We believe it will. So far, so good. To kind of give you an idea of it, we sold the 225 put for $7. We bought the 262 call for $6.95. Nickel credit. So far, everyone knows the market's been going higher, but just to kind of give you an idea of how this trade has been performing, what this has been able to do, it has been able to capture almost half of the move already, in that we have time decay and implied volatility and delta working in our favor on the short put. So the short put has taken $1.80 out of the value of it from 7 down to 520. And the long call has gone from 7 up to 880. So we're making money so far on those two components working together in unison. Now, of course, it's easy to any idiot can make money when the market's going higher. But what I like about this trade is the fact that we do have theoretical unlimited upside. if we come up another $5, and I'll keep everybody updated on this show in the strategy block, if we come up another $5 or so in SPY or 50 points in the S&P, at that point, what I'm going to be looking to do is either doing something, as Andrew would like to hear, either rolling up that put, likely not, because vol will likely be lower if we were to have that, perhaps selling a call spread above the 262 call. That's one other choice. I don't know if I would necessarily want to sell a call and limit the profit on this trade, but perhaps a call spread where we could get some type of premium on it. Maybe close out some of the short puts. But the beauty of this is that when the trade goes your way to begin with, and you're at a point to where you're trying to protect profits, that's where you want to be. And so what a risk reversal enables you to do, at least in our case, is that if the market were to go against us, we have that cushion of up to 10% drop in the market to where we have no obligation. And if it were to come down to our short put price, we have the ability to roll. We have the ability to do the things with which I talked about. The market stays the same. Well, we don't really lose anything because we got our beautiful 5-cent credit. But if the market goes higher, you have a very unique opportunity to take risk off the table. So in theory, let's say SPY went up to 300. The first thing that would happen is when I said there'd be a whole lot of grinning going on, mostly by me, if that were to actually happen, there'd be tears of joy happening by me because of the fact the positions that we're in. But the beauty of that is that you can maintain your upside and you can close out that 225 put for a very small price. And that's not necessarily going to happen. I don't think it's very likely to happen in SPY. But if you're doing that with some other type of stock that has a greater propensity for movement, you have a lot of opportunities to take risk off the table and stay in for a longer period of time. And so that's why I like the risk reversal. I think they work well in the leap category personally with what we do at RCM. Not to say that they wouldn't work with a more near-term time frame, but in the longer-term option time frame, I'm a big fan of the risk reversal for reasons I just discussed. And that is the strategy block for today.
Well done, sir. Uncle Mike loving himself. Weekly straddle. Weekly risk straddles. Easy for me to say. Weekly risk reversals. That far, no farther. Okay. If you listen to his segment, then you know. I am, of course, telling some lies. No, who's not telling lies, though, are you guys. Let's see if we can squeeze in a couple of questions with a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, we got time, I think, for one here. This is your boy here, Mr. Rock Lobster, so you like this one. This comes from Hawkeye. He's written in many times. He's been listening for a long time. I think he's checked out some of your stuff over there. Senior Rock Lobster, he writes, "To ye merry band of magical voice." I get to be the magical voice. I like that. It's kind of nice. The grease-laden meatballs, favorite uncles, and lobsters with tubs, capital T, of butter. So there you go, Tubby. Even you getting some love here from the listeners.
I love this guy.
There you go.
He is poetic. I had no idea.
We could just stop there, but he actually has a question. He goes on to ask, I already get that SVXY, XIV, and other short ETF/ETNs can go bust overnight due to the front two futures doubling. Yes, we talked about that many times on Vol Views once in a while here. What would happen if I held long SVXY puts in an IRA and the fund had to close because the S hit the F? How would I exercise them if the fund doesn't trade? I can't cover due to the underlying being frozen, but I can't exercise without covering because that would put me short in an IRA, or would they still allow it as an exception? How would it all unwind? Thanks for all you guys keeping me learning, laughing, and most of all thinking. Your longtime listener, Hawkeye. Well, such a well-written article. We got to give the man. You know, it's funny. We should actually bring on some of my OCC corporate actions here to break down exactly all the nuances of what would happen. Because we talked about corporate actions not that long ago on the show. Usually there's, a nice little cash settlement price that it all kind of works out to, or there's some funky ratio, 1 share for 3, vice versa. I do a little math. Here's what it works out to, that kind of thing. What you're talking about here is a wee bit of a different scenario, and also one that we've warned against maybe not this specific example, but warned against how all of these heavily short VIX ETPs can blow up in your face pretty quickly if the S hits the F, as this article likes to, I don't know. This is a pretty specific scenario, Mr. Rock Lobster, but since he's your boy, I'll let you go first. You got any thoughts here for what to do specifically in your IRA if you got these and you can't cover and the S hits the F?
I believe, and this is one thing going to the OCC, you can actually search for this. But remember when, I think it was like 4 years ago, there was some, maybe 5 years ago, there was some Chinese stocks that they delisted a ton of the stocks because of they weren't filing accounting reports and stuff like that. And all of a sudden the stocks basically just stopped trading. The exchange halted the trading of the stocks. So I believe because the options settle, they have to come up with a settlement price, and if there's zero stock, they have to assign the value that they think the stock is, or the fact that it's not listed. I believe it literally is like zero. Now this I got to check this one more time, but because the option has an expiration date and it has to settle, the exchange that lists the security has to create an underlying price for the security, and then you just go through the regular exercise settlement process of the whole thing. But there's actually rules for that. So if something goes to zero and you own a put on it, you will collect. But they have to have like they have to have a closing, an actual on the exchange only takes 2 seconds, but they have to have a closing price for that. So that's something I need to check one more time, but that is how I recall them happening. So I don't think anything really has changed much on that. But an option that is being exercised has to have a settlement price.
Yeah, that's where the OCC voodoo would come in. Someone's got to sit down and actually determine what that settlement price is. In this case, it might be a lofty zero, but it sounds like it would be. Yeah, that's what the folks over at OCC, that's their joyous and fun job, to determine what exactly these settlement prices would be. I don't know, Mr. Tubinator, since you're mentioned in there, I'll give you a little love too. Have you seen a bunch of these weird corporate actions? Anything ringing a bell here when it comes to this one?
Honestly, no. I think Andrew probably handled that better than I would have. That was never my expertise with the compliance side. We employed so many of those people around us. But I think I agree with Andrew on that one. They probably would have to set a price somewhere, and somewhere along the line there'd be a cash transaction either in or out of your account on that settlement. Especially on those ones like Andrew really said, they just stopped trading. Chances are they didn't just zero them out, so they probably just had a cash settled transaction like an SPX option as opposed to a stock option.
Yep, you'd be good here in this scenario. You have to wait a little bit. Got to be patient. Might be some nail biting time, but you get your money on your puts. You get paid, but just a question of what that magical price would be. All right, let's keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do a quick check-in on our names. We were watching here at the top of the show. The old Twitters before the bell here, they haven't really extended their gains. They're still up about $3 and change here intraday, after hours. Not so much, pretty much unched. The old Amazon, keeping that fire alive, still up about $75 or so. So that's looking like that's where it's gonna settle out there. So you can't get that bloom off that rose there. It continues to just naggingly push north of that 1,000 handle. So all of you who were celebrating last week or the last couple of weeks the demise of Amazon south of 1,000, you shall have a sad evening, I'm sorry to say. Over there in Alphabet Land, aka the Googs, they closed. They're trading up now about $25. Let's see what they were pricing in, about 41. So they were looking like they were lighting it up in terms of they're right about in pace with what their straddle was. Now it looks like they've given up some of that in the after hours, only up about 2.5%. They were pricing in about a 4% move earlier. So maybe some of that bloom coming off that rose there as well. And last but not least, Good old softy, they were pricing in about $1.75, right around 2.25%, and they're up a little bit north of that. They're up actually decently north of that, about 3.5% right now. Again, trading up in the after hours, pretty well here. So interesting stuff. Yeah, about almost 2x what they were pricing in here. So interesting stuff here across the board. Let's go around the horn one last time. Let's start in Uncle Mike's neck of the woods. Uncle Mike, aside from all these names popping off today, what else is on your radar, sir?
Well, of course, you got all the names that we're watching. It's earnings season. I'm just watching the plethora of earnings in general, and with also watching potential hydrogen bomb tests over in North Korea. It still amazes me how the market really just doesn't seem to care about that. Used to always tell clients, well, if I get new money from a client, I'd say, well, I'll put your money in tomorrow, sir or ma'am. Unless, of course, there's a threat of nuclear war or something, then that could change things. But it doesn't really seem to faze anybody anymore.
No, it does not. And Mr. Tubinator, in addition to your delicious tubs of butter, what's on your radar, sir?
That's actually pretty gross. Just watching these big moves in Amazon and Google and Microsoft. And since the show started, Microsoft up another 2%. After the first initial move, you had Google up $40 and now up 25. It kind of brings to light what we talked about Monday with having some extended options trading, maybe for an hour, hour and a half. This would have been kind of fun with these names this afternoon. What am I looking at for the rest of the week? Not a whole lot, but keeping an eye on Dynergy. That was something I've been talking about on another program, the big call buying that we saw earlier in the week and a big pop yesterday afternoon with some takeover rumors. And other than that, I'm just going to kind of watch VIX go below 10 tomorrow morning and get geared up for next week's round of Facebooks and Apples and everything else.
That reminds me, I didn't even pay off our question of the week so far. We've been asking you all week. You guys really want after hours. What's the best way to make that happen? We gave you 4 choices: pilot for earnings season, top names only, so your Amazon, etc. That would work today, certainly. A basic limit order book or other. So far, 54% saying you want just the top names only, just your Amazons, your Googs, and whatnot. And a tie for second place, 21% each for a pilot, just limited to earnings season, or just your standard kind of basic limit order book and let it all kind of fly high. Others have been chiming in. And for some reason, I can't see. Here we go. Some people saying, Money Engine saying we should start with SPY, SPX, and Apple. Those are his choices. This guy says he doesn't like it. He thinks you need to shore up regularly. This is Mike Turvey. Shore up regularly our liquidity first. Certainly an argument to be made there as well. We got about another day or so to get your votes in on that one, listeners. Uncle Mike, take us home. Actually, I'm sorry, the Rock Lobster. Take us home. What are you watching the rest of this week, sir? And you didn't get a chance to weigh in earlier this week. Where do you fall on the whole after hours controversy?
I think for retail, they would like it. Ultimately, you really only need the half hour after the close. And it's only during earnings season. So I don't think you need like a full-time earnings, because 99% of the earnings are a half hour after the close, hour after the close. So that does, I think it's probably, with everything being electronic anyway, it's not going to be long till the exchanges do that. However, the liquidity and the underlying is a little sketchy. So it's a little of the Wild West. So it's one of those things where I think it's well-intentioned. They probably are going to do it. Is it going to help people a lot? If all of a sudden, Google's up like $20 a tick, it's sort of, what are the options really going to do at that point? Usually, but so I would say it's probably better not to have it at this point, because it might cause more trouble than it's worth. But that's my own personal view on this particular thing.
All right, we'll have to leave it there. Unfortunately, that music means we're done. We've gone long talking about all this fun stuff. Let's go back around the horn really quickly one last time, see what's cooking with everybody. Let's start with the Rock Lobster. Sir, what's cooking in your neck of the woods? Any webinars coming up?
Yes, we will have the Easy VIX course after November 4th. So if you want to learn how to trade VIX, and then will be a 4-part webinar after that. We will unmask all the secrets of VIX. There you go, right there for you.
Ooh, VIX Unmasked. I like that. I would sign up for that webinar, sir. See, there you go. All your marketing done for you here for free. Speaking of webinars, a little birdie told me one Uncle Mike might be having a webinar of his own on November 8th. If so, sir, what might you be talking about?
I'm going to be talking about differences on trading options on equities versus options on futures. Joseph Natali is going to be joining me on that webinar, and we're going to kind of do a compare and contrast on it. So we're excited, and it's been a year or so since it's been a while since I've done a webinar. So I think at one point I held the Guinness Book of World Records for most webinars, but it's been a while. So excited to come back on it.
There you go. Shaking off the rust. Check them out November 8th. You can go to RSM US. We'll probably put a link in the show notes, too, so you guys can register there if you didn't get enough Uncle Mike on the show today. He'll got you covered. And last but not least, soon-to-be CIA analyst, Mr. Tubinator. Anything cooking in your neck of the woods, sir?
Not much. I'm going to probably go up and put my straitjacket on here shortly because my wife has left me for the next week. So have to keep myself in check. But that's all I've got going on at the moment here. So hopefully we'll. I keep teasing, but sooner or later we'll get to say something to you.
There we go. All right. Well, hopefully your wife comes back, or at least you can find her. And of course, we'll be back next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.